Good morning and welcome to Forex In Four. Today is Tuesday, August 16th, 2011. This morning we're starting out by taking a look at the euro because this seems to be where all the news and, well, quite frankly, the risk in the market is emanating from this morning. Now, we just had, and something interesting, but I just wanted to reiterate that we're now starting to get back a little bit towards the fundamentals in the marketplace. We know about the risk that had happened last week when, these volumes increase and these ranges expand and the volatility picks up, that you get these wild swings going all over the place until things start to settle down. And we haven't settled down that much quite yet. I mean, we're not at the 500 Dow points up, 500 Dow points down sort of days, but yesterday Dow was up 200 points. This morning futures are down 100 points, so there still is quite a bit of range there and a bit of volatility. And I wonder if that doesn't have to do with some of the summertime people not being as in the market, although you'd have to be insane not to be in these markets if this is what your primary business is. So in any event, getting back to the euro, they had their GDP report come out last night, and German GDP it decreased. All right, they were expecting 3.2% gains. They got 2.8%, which pushed the year over year. Let's see, to 2.7% gain versus a 3.1% gain. So those were lower figures. All right, now the overall Eurozone GDP. All right, it shows that it increased 0.2% versus an expectation of 0.3%, which pushed that year over year to 1.7% versus an expectation of 1.8%. So the overall Eurozone numbers aren't that bad, just barely missing expectations. But I think that people are concerned that Germany's slowing, and since they are Europe's largest economy, that could be a problem. So in any event, you can see that the euro is selling back here a little bit. And you can just see yesterday on the 30-minute chart, I've been talking about this range that we've been in, 145 to 141 for some time right now. And boom, yesterday you had an opportunity to sell just ahead of that at 145, and you could have stopped yourself just up at that first pivot point resistance up there at about 145.30 area. So that's what we're seeing with the euro for right now. Meanwhile, as I'm speaking, there's a meeting going on between Sarkozy and Merkel. That's France and Germany. Maybe this new, we'll call it the Franco-Prussian Accord, and they're trying to hammer out deals, excuse me, for what's going on with the European debt crisis. So right now they're discussing how to enforce what they've done already. All right, they're trying to expand the EFSF, which is the emergency fund. All right, and they're just trying to make sure that markets are stable and that they have a credible plan going forward. All right, now a lot of people in the market are actually calling for some euro bonds to be created, and the idea is that if you could get the strong countries matched up with the weak countries, okay, now you could issue a bond which would have a better reception in the market. And you could, raise some capital to fund a lot of this indebtedness in individual countries. And, it was interesting, but I saw earlier this morning, you talk about the PIGS countries and how bad their debts are, and as a percentage of GDP. Well, if you take the Eurozone overall as a whole, all right, I think the percentage of debt to GDP is something like 6%, which is nothing. And they're actually going to have a surplus in, I think, 2 or 3 years if all these PIGS countries go on their own austerity measures, which, again, they're still going to be way over that mark. But so it's just interesting to see, the political wrangling there. But I think the Eurozone ministers are really getting back to a point where they realize, hey, something needs to be done here. So in any event, we've got euro in this range, 145, 141. I suspect perhaps we'll trade lower here. And to be honest with you, euro hasn't sold off as much as I would expect with the futures down as much as it is, because you can see that today really is sort of a risk aversion day. I just want to show you gold here real quick. All right, little quick pop in gold. Okay, and we're back up to the 1780 area. It had sold up and down around 1740s thereabouts. And I think what's also interesting is that yesterday we had gold climbing. Okay, and yesterday was sort of a risk-taking day, so interesting dynamic going on there with gold. Just want to show you the pound real quick. I haven't been talking about the pound much, but this is a decent week for the UK. They had their consumer price index figures come in this morning, and they came in hotter than expected. All right, they're expecting a 4.3% inflation. They got 4.4% inflation. So, meanwhile, the Bank of England's been saying all along, no, inflation's going to come down as the economy cools, and we're not going to do anything about interest rates. And this hasn't really been the case. And I think with the recent rioting we've seen over there, public opinion is really getting to a point where these people are starting to get squeezed. All right, austerity measures have kicked in. in, and people are starting to lose some of the benefits and the entitlements and things that they have over there, and it's really starting to come to a head. And part of the problem is that the most recent talk out of the BOE is that they're going to go on further monetary expansion. All right, so they're talking about potential quantitative easing to sort of smooth over the rough patch and the potential declines in the economy they're going to get because of the austerity. Well, meanwhile, that's going to drive inflation higher if they do that. So my guess is that when we see the meeting minutes tomorrow, all right, there still may be some talk about quantitative easing, okay, but I think the market, potentially is going to go up here for the pound before it comes back down. So, we'll have to keep an eye on the pound and see what's happening there, but they're in an interesting situation. Okay, just want to show you, that's the two big news that's coming out so far this morning. All right, just want to show you Euro Swissy. Okay, you can see Swiss franc is strengthening here versus euro a little bit. Okay, we pulled back from just under or just the 114 and change highs. Now Switzerland, they're got to do something here about the franc. They've been talking and huffing and puffing about possible intervention and all these different things pegged to the euro, perhaps a target rate. But it's going to get to a point where if something happens here this afternoon with this with this Franco-Prussian meeting that's happening, or if nothing happens, then there could be some additional flight to safety, which would cause Swiss franc to strengthen here. So going to keep an eye on that. I just want to show you dollar yen real quick. Oops, that's euro USD. Let's look at dollar yen. Okay, dollar yen sitting right in this tight range here, right about 76.71. All right, we've got this 76.25 as the low area here, and I think it's possible that we could test that. And if we break down that level, it looks like the next stop is maybe 75. So we're going to have to see what Bank of Japan does here about intervention. They warned about taking bold steps if necessary, and we're going to have to keep an eye on Japan, see what they do. But for right now, I guess everybody's hoping that we don't go into this major risk aversion mode, and that markets can get back to moving higher. But in that same token, we see that sometimes when that happens, you get a lot of dollar weakness, and we know the dollar is going to be weak because Bernanke told us so. All right, Bernanke said we're going to keep the dollar weak until at least mid-2013. So there's a lot of time in there for speculators to move within the marketplace. So later this morning, we're going to get U.S. building permits and U.S. housing starts. All right, and those are expected to be a little bit lower than they were last month, and we're going to see, how those numbers come in. I mean, once you start setting the expectation on the bar really low, it's kind of easy to beat it at these points. So they're expecting U.S. building permits to decline 1.9%, and they're expecting housing starts to decline 4.6%. So we'll just keep an eye on that. I don't know that it's necessarily a huge metric or a huge deal, but there's some counterintuitive logic in there. If housing starts increase, perhaps that's not a great thing for the housing market overall in general. Yeah, maybe it's good for GDP and the economy, although it's a small amount. Okay, but now there's more homes supply on the market, which could potentially force prices lower, which runs into this whole deflationary thing that Bernanke's been trying to avoid by trying to keep money so cheap. Although the banks aren't lending it out, velocity money's slowed quite a bit. So the housing market still is a major drag on the economy here. So that's kind of what we're looking at today. This news, the press release from the meeting for Merkel and Sarkozy, I think, are coming out around it's either 12:30 or 1:30 Eastern time here. I'm not exactly certain. I'm bad with the GMT math, but just keep an eye on the markets at that point. Usually, we start to slow a little bit as European markets close. Well, there could be some fireworks today. So that's what I'm looking at, folks. Good trading to all.